Scott Bessent, who was the Treasury Secretary, said that the US could take a huge hit from the government shutdown, and this will affect normal people like you and me. But is this true? Is he exaggerating? Also, President Trump's economic advisors are warning that a prolonged shutdown could lead to serious economic consequences, and the US will lose $15 billion in GDP each week of a shutdown. I will reveal the truth like always, and also I will compare it to the previous shutdowns, and also I will share what will happen to the economy and the stock market in the worst case scenarios, because once we know the worst case scenarios, we can be safe. But first, let's take a listen to what Bessent said.
Shutting down the government and lowering the GDP. We have a 3.8% GDP, and the Democrats shut down the government. That we could see a hit to the GDP, a hit to growth, and a hit to working Americans.
But will this affect normal people like you and me and hit the GDP like what Treasury Scott Bessent said? Well, let's break it down to you. The short answer is yes, it will affect us, as there will be a domino effect similar to the one happened back during COVID. The first domino effect that will fall is the federal workers, as they will not get paid. Federal workers will stop spending or spend less money. This will lead to the next domino fall, which is small businesses. Mike, who is a federal worker who used to stop at a coffee shop every morning to get his freshly brewed coffee, will stop getting his coffee from the coffee shop and make it at home instead. The coffee shop will have less income to cover his payrolls, which might lead to cut staff. Also, companies working with the government will not get paid. Those companies like tech companies, for example, constructions and security, some may lay off their staff or close temporarily. Another domino will fall, which is tourism, because national parks are mainly federal workers. National parks and museums will close. This will lead to fewer tourists, and this will hurt the hotels, restaurants, and travel companies, just like what happened back during 2013 shutdown. A family cancels a trip to Yellowstone, for example, because the park is closed. This means no flight booked, no hotel stayed, thousands of dollars not circulating in the economy. So, the government shut down because Congress did not agree to pass a new budget, and that was mainly over healthcare funding. Democrats want to keep the funding, while Republicans want to cut or limit the funding. And the cutoff date to reach an agreement was October 1st. Unfortunately, they did not reach an agreement until this time, so the government officially announced the shutdown. What happens now? Well, the first thing that will happen is that non-essential workers will be sent home without pay. What do you mean by non-essential workers? Those people who work at national parks, museum workers, researchers at agencies like NASA, for example, who aren't working for urgent projects, and passports and visa processors. On the other hand, essential workers will continue working without a pay, and those are military, traffic controllers, and border security. Another domino that will fall, which is housing market. Loans will get delayed. If you are planning to buy a home with FHA loan, the approval will freeze. Less people will buy houses, which means less demand, so the housing prices will fall temporarily. Another domino that will fall, which is the stock market, obviously. We all know that investors hate uncertainty. Markets can drop temporarily during a long shutdown because people fear slower growth. Even if you don't trade stocks, your retirement fund 401k can fluctuate in value. For example, what happened during 2018 shutdown, markets were volatile. Historically, government shutdowns do not affect stock market. It only when it takes longer than what one expected, like what happened back in 2018, which was the longest shutdown in the US history. All other cases, the S&P 500 rises or at least stays steady during shutdown, like in our case right now in 2025. Nothing has changed yet because the market usually looks on the past shutdowns and projects the current one unless something out of the norm happens. For example, tariff rate were something unprecedented, and that's why we saw the S&P 500 dropped 17%. The market wasn't sure what's going to happen, especially that it will affect the revenue of many companies, like for example Apple, that manufactures iPhone in China. If Apple were to open factories in the US, the margins will shrink, so investors freaked out the stock. Then they started selling their stocks. When can I say that the stock will have a minor crash or volatility? When the shutdown takes longer than expected. But there's something that is really important to know, which is this shutdown is accompanied by other factors like high US debt, weak employment data, tariffs, and high interest rates. In this case, the shutdown can be considered unprecedented, but nothing happened to the stock market yet. My take is stock market will stay strong unless it takes longer. But what's going to happen to the stock market if the shutdown takes longer? What I mean by longer is more than 1 month. Here's what's going to happen. Here's the worst case scenario that you came for. If it happens, then it will shift from a political fight to a real economic problem. That's when federal workers who are sent home temporarily stay at home permanently. This will happen in addition to the current slow job market. This can lead to a mini recession. Stock market will react immediately and drop because stock market hates uncertainty. We saw what happened during COVID. Also, let's not forget that we will not have job reports because people who collect these data are government workers and they did not get paid, so they are staying at home. We will not only be uncertain about shutdown period, but also we will be uncertain about the jobs report. At that time, we will see Fed cutting rates. Also, many people will start buying gold as it will be the safe haven. I think we might see another 15 to 20% stock market fall like what happened back during the tariffs time. But this will be a temporary fall, which is a great chance to buy the dip, like what happened back in March during the tariff. The stock market recovered within a few weeks or maybe 1 to 2 months maximum. I know many people are stacking cash. They think the 2018 scenario will repeat, but who knows? What I think is that the shutdown will not take too long, and if anything is going to hit the market, it's going to be something else unexpected in the future.